Hi, Kalimera. This video is about an overview of federal income tax, based on Bar Charts Incorporated's legal guide, a synopsis for your bar exam or for your work or personal interests in this very challenging and tough field of practice. Bar Charts Incorporated's legal guides are designed to provide a comprehensive yet concise overview of key legal principles, including federal income tax laws. These guides are invaluable for law students, paralegals, and practicing attorneys as they serve as a quick reference tool for understanding critical tax regulations. Below is a detailed breakdown of the topics covered in the Federal Income Tax Guide. 1. Administration. The federal income tax system is administered by the Internal Revenue Service, IRS, under the authority of the U.S. Department of the Treasury. The IRS is responsible for enforcing tax laws, collecting taxes, providing guidance on tax compliance, resolving disputes through audits and appeals. The administration section also highlights the role of Congress in setting tax policies and the importance of court decisions in interpreting tax laws. 2. Personal income tax. This section covers the taxation of individuals, including tax brackets based on income levels, progressive tax system, filing statuses, e.g., single, married filing jointly, head of household. Personal exemptions and tax credits, such as the Earned Income Tax Credit, EITC. 3. Definitions. Key terminologies used in tax law are explained here, such as taxpayer, any individual or entity subject to income tax. Taxable year, the calendar year or fiscal year for which income is reported. Adjusted gross income, AGI, gross income minus specific adjustments like student loan interest and retirement contributions. 4. Gross income. This section defines gross income as all income received in the form of wages, salaries, and tips. Business profits. Investment income, e.g., dividends, interest, and capital gains. Rental income. The guide emphasizes that gross income includes all sources unless explicitly excluded by law. 5. Exclusions. Not all income is taxable. Common exclusions include gifts and inheritances, life insurance proceeds, certain employee fringe benefits, such as health insurance premiums paid by the employer, municipal bond interest, scholarships and grants, under specific conditions. 6. Deductions. Taxpayers can reduce their taxable income by claiming deductions. These are divided into two categories. Standard deduction, a fixed dollar amount based on filing status. Itemized deductions, expenses such as mortgage interest, medical expenses, state and local taxes, and charitable contributions. 7. Depreciation deductions. Depreciation deductions allow businesses and individuals to recover the cost of assets over their useful lives. This section discusses straight-line depreciation, accelerated depreciation methods, like MACRS, modified accelerated cost recovery system, deduction limits for luxury vehicles and other special assets. 8. Tax imposed. This section explains how income tax is calculated. Taxable income equals gross income, adjustments, deductions. Tax is then computed using the tax rate schedule. The guide also covers additional taxes, such as the alternative minimum tax, AMT, and self-employment taxes. 9. Capital gains and losses. Capital gains, profits from selling capital assets, e.g., stocks, real estate. These are taxed at different rates depending on whether they are short-term, held for less than a year, or long-term, held for more than a year. Capital losses, losses from the sale of assets can offset gains and reduce taxable income. The guide emphasizes the preferential tax rates for long-term capital gains. 10. Corporate income tax. This section outlines the taxation of corporations. Corporations are taxed as separate legal entities. The tax rate applies to the corporation's net income, gross income, deductions. Special rules apply to S corporations, pass-through entities, and C corporations, subject to double taxation. 11. Types of businesses. Different business structures have distinct tax obligations. Sole proprietorships, income is reported on the owner's personal tax return. Partnerships, income is passed through to partners. Limited liability companies, LLCs, taxed as partnerships or corporations based on election. Corporations, taxed separately from their owners. 12. Special corporate deduction rules. Corporations enjoy special deductions to lower taxable income, such as charitable contributions, subject to limits. Net operating losses, NOLs, which can be carried forward. Dividends received deductions, DRD, to avoid double taxation. 13. Mergers, acquisitions, and recapitalizations. This section discusses tax implications during corporate restructuring. Tax consequences of mergers and acquisitions. Rules for recapitalization, which often allow tax deferral for shareholders. 14. Tax-free corporate formation rules. Covers the tax benefits of forming a corporation. Contributions of property in exchange for stock are typically tax-free under Section 351 of the Internal Revenue Code. 15. Corporate distribution rules. Outlines the taxation of dividends and other corporate distributions. Qualified dividends are taxed at a lower rate than ordinary income. Non-dividend distributions may reduce the shareholder's basis in stock. Conclusion. This Bar Charts Incorporated digital guide serves as a comprehensive and practical reference for federal income tax law. It simplifies complex tax regulations and provides valuable insights for law students, legal professionals, and even taxpayers seeking clarity on tax-related matters. Whether you're studying for the bar exam, working in tax law, or looking for a refresher, this guide ensures you have the most critical points at your fingertips.